This is Daria Shabbat with CorporateProfile.com reporting on the news for Monday, March 12th. The New York Times reports in another milestone in the banking industry's recovery from the financial crisis, the Federal Reserve will release the results of its latest stress tests this week, which are expected to show broadly improved balance sheets at most institutions. For the financial sector, including traditional banks and Wall Street firms that were at the heart of the panic during the crisis, the recovery has been slow but steady, with some banks recovering much faster than others. The examination is not merely an intellectual exercise. If institutions fall short, they could be required to raise billions in new capital, depressing their shares. Under the tests, Federal Reserve specialists are trying to predict how capital levels at the 19 largest banks would withstand an economic downturn even more severe than the one that followed the Lehman collapse. Bloomberg reports Euro area finance ministers seeking to step past the largest sovereign debt restructuring in history will attempt to gain a foothold this week as they grapple with implementing the latest Greek bailout. Ministers from the 17 nations that share the euro will gather in Brussels today to sign off on the €100 billion package for Greece's second bailout, after bondholders agreed last week to take a loss on the country's debt. They'll also focus on Spain's budget-cutting efforts and Portugal's aid program, underscoring their desire to prevent contagion. The debt swap seeks to wipe more than €100 billion off Greece's books and contain an economic collapse in the country, as European overseers work to hold Greek leaders to their commitments. Reuters reports Spain, the Eurozone's fourth biggest economy, was quick to impose austerity measures to protect itself from the euro debt crisis. It planned to cut its budget shortfall to 6% of its GDP in 2011, but reported an 8.5% shortfall instead. In 2012, it was to cut the deficit to 4.4%, according to a path agreed with EU finance ministers. But with unemployment at 23% and rising, Spain's new government announced earlier this month that it would aim only for a cut to 5.8%, while still maintaining a 2013 goal of 3%. I'm Daria Shabbat with CorporateProfile.com reporting directly from Wall Street. Thank you for watching, and please tune in again for more hot financial news.